In early 2021, a routine financial audit inside a European bank uncovered something strange. At first glance, everything looked perfectly normal. There were corporate payments moving between companies across several countries. Consulting fees, advisory payments, management services. The kind of transactions that happen thousands of times every day inside the global financial system. Nothing about the payments looked illegal. Nothing looked suspicious. But when auditors zoomed out and looked at the bigger picture, something didn't make sense. Over $500 million had quietly moved through a web of companies. Hundreds of transactions. Dozens of corporations. Money flowing from one country to another, then another and another. Yet despite this massive flow of cash, investigators couldn't find a single person who appeared to be directly controlling the money. There were no executives authorizing the transfers. No traders placing orders. No financial managers signing off on withdrawals. It almost looked like the money had moved on its own. Of course, money never moves on its own. Somewhere behind those transactions, someone had built the system. Someone had designed the network. And when investigators followed the financial trail far enough, one name kept appearing again and again. A quiet financial consultant. Not a billionaire. Not a famous banker. Not a Wall Street power player. Just a man working behind a laptop, sending emails and writing invoices. But according to financial records, that man had quietly helped move $500 million through the global banking system. And the strangest part, he never handled the money himself. No cash. No briefcases full of dollars. No secret bank vaults. Just paperwork, contracts, and a web of companies that technically didn't do anything at all. His name was Adrian Mercer. And by the time authorities realized what he had built, the system had already been running for years. Adrian Mercer didn't grow up dreaming about becoming a financial criminal. In fact, his career started in one of the most ordinary jobs in finance. Compliance. For almost a decade, Adrian worked inside large corporate financial departments reviewing transactions. His job was simple. Look at financial records. Review invoices. Check whether companies were following regulations. In other words, Adrian spent years studying how financial crimes are supposed to be detected. And over time, he noticed something interesting. Most fraud doesn't get caught because criminals are careless. It gets caught because their transactions look unusual. Large sudden transfers. Unexplained deposits. Strange financial patterns. Those things trigger alarms inside banking systems. But the transactions that don't get investigated are the ones that look boring. Consulting fees. Corporate advisory payments. Business service contracts. Thousands of companies make these payments every day. Banks rarely question them. Because from the outside, they look completely normal. Adrian realized that if someone understood how those systems worked, they could hide enormous amounts of money inside ordinary business transactions. That realization planted an idea. In 2016, Adrian left his job and opened a small consulting firm. At least, that's what it looked like on paper. In reality, the company wasn't designed to provide consulting services. It was designed to do something else entirely. It was designed to move money. But one company alone wouldn't be enough. To make the system work, Adrian needed something more complex. A network. So he began quietly creating companies in several different countries. Some were registered in Estonia, others in Cyprus, some in Singapore, and a few in Delaware, one of the easiest places in the United States to register anonymous companies. Each company had official paperwork, corporate directors, business addresses. But behind the scenes, none of them had real employees or real operations. They existed only on paper. And Adrian controlled them all. This network of shell companies would become the foundation of the entire operation. Once the corporate network was in place, Adrian built the next layer. Bank accounts. Each company opened its own business account in different banks. Because the companies were legally registered and had proper documentation, the accounts passed basic compliance checks. Everything looked legitimate. Different companies, different directors, different countries. But in reality, Adrian controlled the entire system from behind the scenes. Now he needed money to move through it. That opportunity came from an unexpected place. Criminal organizations. Around the world, criminal groups generate enormous amounts of illegal profit. Drug trafficking, fraud schemes, corruption, cybercrime. But there's always one big problem. Dirty money can't easily enter the legitimate financial system. If criminals deposit large amounts of suspicious cash into banks, authorities start asking questions. So they need ways to launder the money. That's where people like Adrian come in. Through private contacts and financial intermediaries, Adrian quietly offered a service. If someone needed to clean large amounts of money, his consulting firms could help. But instead of depositing cash, the clients did something much simpler. They sent bank transfers. On paper, the payments looked completely legitimate. The transfers were labeled as consulting fees or business advisory services. And because businesses pay consultants all the time, banks rarely question the transactions. Once the money entered Adrian's network, the real process began. The first company would receive the payment. Then it would send the money to another company in a different country. That second company would issue another invoice and send the money again. Then another transfer. Then another. Each payment was labeled as a different service. Market research, technology consulting, corporate strategy. All fake, but perfectly believable. To banks, it looked like companies paying each other for professional services. But the real goal wasn't consulting. It was layering. Layering is one of the core techniques used in money laundering. The idea is simple. Move money through so many transactions that its original source becomes impossible to trace. And Adrian had turned layering into an art form. In some cases, money passed through 6 or 7 companies across multiple countries in less than 2 days. Millions of dollars flowing through the network like water through pipes. And because every transaction had documentation, invoices, and contracts, the banking system saw nothing unusual. For several years, the operation ran almost perfectly. Money came in. It moved through the network. Then it emerged clean on the other side. From there, the funds could be invested in businesses, used to buy property, or moved into private accounts. And by the time the money reached its final destination, the trail was almost impossible to follow. By 2020, Adrian's system had processed hundreds of millions of dollars. But the larger the operation became, the harder it was to remain invisible. And eventually, one small detail attracted attention. The scheme began to unravel because of a bank employee in Frankfurt. While reviewing corporate transactions, a compliance officer noticed something unusual. Several different companies were making large payments for consulting services. That alone wasn't strange. But the descriptions on the invoices looked oddly similar. The same vague phrase kept appearing. Strategic advisory services. At first, the officer ignored it. But as more transactions appeared with the same wording, curiosity grew. Millions of dollars were being paid for consulting work with almost identical descriptions. and the companies involved seemed to have no real online presence. No websites, no employees, no clear business operations. That was enough to raise a red flag. The bank filed what's called a suspicious activity report, which is sent to financial crime investigators. When investigators began reviewing the transactions, they noticed something else. The payments weren't random. They were connected. Money flowed from one company to another in a repeating pattern. And when authorities started mapping the transactions, a network began to appear. Dozens of companies, multiple countries, all linked by consulting payments. Eventually, investigators traced the connections far enough to identify the person behind the system. Adrian Mercer. At first, the connection was indirect. His name appeared in email contacts, consulting agreements, business registration documents. But the more investigators looked, the clearer the picture became. Adrian wasn't just involved in the companies. He had built the entire structure. By the time authorities fully understood what was happening, more than $500 million had already passed through the network. And the money had traveled everywhere. Investment accounts, luxury real estate purchases, private funds, crypto exchanges. Much of it had already disappeared into legitimate financial channels. But the digital trail was still there. In early 2022, investigators executed search warrants at several offices connected to the companies. Servers were seized. Emails were recovered. Financial documents were analyzed. And the evidence pointed to one conclusion. Adrian Mercer had engineered one of the most sophisticated laundering operations investigators had ever seen. What shocked authorities most wasn't just the scale of the operation. It was how simple the method had been. Adrian never carried suitcases of cash. He never withdrew millions from banks. He never even directly transferred money between accounts. Instead, he built a system that allowed the financial network itself to move the money automatically. Invoices triggered payments. Payments triggered new invoices. And the money moved through the system almost like a machine. Technically, Adrian had never physically handled any of the money he helped launder. But prosecutors argued that didn't matter. He had created the infrastructure. He had designed the transactions. He had controlled the companies. And that made him responsible for the entire operation. The charges were severe. Money laundering, wire fraud, financial conspiracy. If convicted on all counts, Adrian faced the possibility of spending decades in prison. But the story left investigators with an uncomfortable realization. The system Adrian exploited wasn't broken. In many ways, it was working exactly as designed. The modern financial system moves trillions of dollars every single day. Banks rely on automated monitoring systems to detect suspicious activity. But those systems are designed to catch obvious crimes. Large cash deposits, sudden unexplained transfers, fraudulent transactions. What they struggle to detect are transactions that look perfectly normal. Consulting payments, corporate service fees, business invoices. Those happen constantly in the legitimate economy. And that's exactly why Adrian Mercer's system worked for so long. His transactions didn't look criminal. They looked ordinary. And sometimes the most dangerous schemes are the ones hiding inside everyday business activity. Because somewhere in the endless flow of global finance, millions of dollars can move quietly from one account to another, across borders, through companies that barely exist, through paperwork that nobody questions, until one day someone zooms out and realizes $500 million has disappeared into the system. And by then, it's already too late.